Well, welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Honf and Nam Phan of Pacific Private Money. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is entertainment, and with the sun not shining and people wanting to get their tan on pretty soon. Not a bad thing to do. Check them out at Tan Bella. All right, Mark and Nam, we have the year 2021. How was that for you guys?
It's funny, I always tell my wife every year that I don't like reading the newspapers and the magazines in the week between Christmas and New Year's because all they talk about is the year that was, the top 5 of this or that or the other thing. And I've always been a forward-looking kind of guy. And now, unless it comes to bragging rights that we have, like Nam and I talking, and maybe we'll brag a little bit about how well Pacific Private Money did as a company this past year. But, just from the standpoint of 2021 in general, I think most of us were happy to have it be over and looking forward to 2022. But then what's happened in the last couple of weeks? The darn virus, I think we all know people who are getting it left and right. Several of our agents have it. And now a number of live events that I was looking forward to going to in the coming weeks are being canceled or converted back to virtual events, which I hate. I mean, Zoom is great for many, many things, but it doesn't replace, person-to-person, belly-to-belly conferences where you get to get out there, meet people, network, collaborate, mastermind, all of that stuff. Some might disagree, and some, I guess, have grown rather fond of Zoom and never having to leave your house and put on pants. But my preference is the alternative. So I don't know. Who knows what's going to happen this year in terms of the virus and the various mutations. But I think one thing that we can pretty much hang our hat on, to the extent that we're going to talk about real estate and the mortgage market today, is that the single family residential real estate market has remained not only just resilient, but robust throughout the pandemic, throughout the waning of the pandemic in 2021. And now that we're in 2022, it looks as though the residential real estate market is going to remain strong nationwide. And that's notwithstanding what's happening with interest rates and inflation. Even I've been listening to a number of podcasts, reading articles, and talking to people who are smarter than me when it comes to things of that nature and the economy and economists. And the vast majority, or actually the only conversation I'm hearing, is that I have yet to hear anyone who fears that inflation and or rising interest rates is going to cause any kind of, significant shift in the market vis-a-vis home prices, demand, and the ability for people to obtain financing to buy those homes.
So we're not having a situation as much, I don't think, are we, with regard to people, moving from the city to the suburbs because of the pandemic? I mean, did that seem to kind of run its course, or is that still going on?
Well, it's still happening in real time. People are still moving out of California, but not in droves. It's funny, we live in Marin County, and our local paper said that Marin County had a net outflow of people. Right. And I'm thinking, it must be like 5 people moved out, and that's a net outflow in Marin County.
Yeah, the 4 people moved in, exactly. That's 25% difference or 20% difference.
Yeah, they said, right. They said it was like about a 15%, increase in the number of people who moved out from 20 to 2021. And I'm thinking, okay, I'm doing the math in my head going, yeah, it's about 5 people.
You know what? I wouldn't mind it, because that much more the roads get clear.
Yeah, that's right. There you go.
I'm enjoying the lack of traffic. Yeah. But I'm just, the articles in the major resources that we follow here at Pacific Private Money. One of them is Redfin News, excellent collector of data. And they've got, 2 articles in this past week. One is, housing market update. Home prices rise to new record high. And that was as of December 29. It's continued to go up. There hasn't been a downward move in nationwide home prices for quite some time. And then the follow-up article this week, the first week of January, housing market update. Home buyers face record supply shortages heading into 2022. So we still have that combination of, relatively low interest rates and a severe lack of inventory, which and people who still want to move. And you've got the growing millennial market and pressure to buy their first home. You have a lot of people in California who are working in the various fintech, prop tech, and other technology companies that are making lots of money and they're still renting and they would like to be homeowners. And we're just not building homes at the rate that we would need to.
All right, we're going to cover more in the next segment. Going to our first trivia question. Entertainment is the theme. What singer was the first Latin American actress to be paid $1 million for a movie role? Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate, which is worth over $100. And it's a common name. It's not some odd name you never heard of. Also want to make a quick mention here for Mountain Mike's Pizza in San Rafael. By the way, Mountain Mike's is a major sponsor of the 49ers. They're like the official.
Oh, really?
Pizza. Yeah, just found that out.
Yeah.
Nice.
Check them out at Mountain Mike's Pizza in San Rafael. Pizza the way it ought to be. All right, stay with us. The Best of Investing is going to be right back. Welcome back to the Best of Investing. I'm Edward Brown, along with Mark Hump and Nam Phan of Pacific Private Money. Our first trivia question: what singer was the first Latin American actress to be paid $1 million $1 million for a movie role?
Well, I don't think it was Charo, but
no, that's true.
J-Lo.
Yeah,
that is correct. That's right, Jennifer Lopez. Very good. All right.
You still have her tattoo there, Edward?
Yeah. She's a very pretty woman, but I do not have it tattooed on my body.
Oh, okay.
Okay.
Got it.
So Nam, you said last year we went through predictions.
Yeah. So you started the first segment by talking about a recap of 2021, and it was a year ago December. And I think we covered this on a previous show, but it was before Mark wasn't on that one. So December 2020, we did predictions for a year out, and I asked these 5 questions. Will real estate have appreciated by the end of December 2021 over December 2020? Will interest rates be above or below 3.5%? Will the Dow be above or below 30,000? Will unemployment as of December 3rd, 2020, at 6.9%, be above or below 4% in December 2021? And then we'll be able to go to concerts, sporting events, et cetera, by December 2021.
We can ask about inflation. That wasn't a question.
Yeah, maybe that's for this time next year, right?
Yeah.
We'll ask that. So
that
we'll
was not on our mind last year. Inflation was
not at all.
Yeah.
So did real estate appreciate by the end of year over year between December 21st and December 20th? Mark and Edward both say 0 to 5% appreciation.
0 to 5. That's right. I remember that.
Yeah.
But,
we were
What is it?
triple that.
Yeah,
we had 3x that nationwide, right? Was that 15% year over year?
Yeah, I think it was, or it's, I thought I read some article where it was over 20%, but 15% sounds about right.
And So California was not. The nationwide, it was the first year, I believe, in 20 years where nationwide home prices appreciated higher than California's own home price appreciation. I think California was still in double digits, but nationwide 15, 16%. So very unexpected.
Well,
so what do you guys think for this time next year, or let's say December 2022? Do you think it's going to be 0 to 5%, 5 to 10, or above 10?
I'm going to go 0 to 5 for wishful thinking, because I'm actually hopeful that home price appreciation will slow down
Yeah.
And so I'm going to predict it to slow down, even though it wouldn't surprise me if it ended up being 10% year over year once more.
I'm going to say 6.23%. I'd go out four more decibels if you'd let me, but
well, you can if you want. We'll have to take it offline though. Okay, next question. Will interest rates be above or below 3.5%? You both said below 3.5 and you were right. So you both get a cookie.
a cookie. Okay.
How about for
2022? I
Yeah.
think we're going to hover close to 3.5. I don't
think
know
it's going to be over 3.5 by the end of the year. It wouldn't surprise me if 30-year mortgages were bumping up against 3.8, maybe 4.
Okay.
Okay.
All right. Next one, will the Dow be above or below 30,000? So you guys both said it was below 30 and it ended up over 30, 35-ish, I think.
So
We were way off. The stock market has continued to completely baffle me, and
I know.
probably most guys who are like real estate centric, like I am, that I've spoken to, have said the same thing. They have no idea why the stock market keeps going up.
yeah. So now, where's the mark now at 35,000? Is that going to be the question?
Yeah. Yeah.
So will it hit 40 by the end of the year?
Oh, I don't think it'll hit 40. If that's the
I don't
mark,
think
I think it'll be below 40,000.
40,000.
Let's make this
Okay.
easy. Will it be below 80,000? Yes, I think it'll be below.
Will Bitcoin be above or below 80,000? That's another question.
Emails I keep getting are telling me to buy now because it's going over 100,000 in 2022, which I do not personally subscribe to.
Yeah, I'd
Yeah,
be very.
yeah.
I'd like to bet against those people for sure. Okay, what was
All
the
right.
next one?
So unemployment, is it was 6.9% December of 2020. Would it be above or below 4%? You both said it would stay above 4%, and it is above 4%, or it was
Slightly.
as of December. Yeah, slightly. So it improved, but didn't cross the 4% mark.
Okay.
Do we feel it's going to be above or below 4?
I would say it's going to remain around 4, which, traditionally is close to full employment.
Yeah.
Given that there seems to be a strong demand for employees, and a lot of businesses, particularly the lower paying ones, a lot of the people are thumbing their nose at $15 an hour, and I don't blame them. But I know we doubled the size of our company's employee numbers in the last 24 months, and we're still hiring like crazy. And everybody I know in real estate and alternative mortgage origination are looking for new hires. Conventional mortgages, though, are starting to lay off because of because refinances are basically going the way of the dodo bird for a bit. So I don't know. I would say it'd probably be around the same this time next year.
Yeah, I agree.
Yeah.
4%. Okay. And last question. Now this one is interesting. Will we be able to go to concerts, sporting events, etc. by December 2021? And you both agree that we'll be able to go to concerts as of last month. But how about going into this coming year? What do you think?
Yeah, I think so, because they'll still figure out, be tested, vaccinated, boosted, whatever. Which, by the way, Israel apparently came out with a new strain or something, and they call it the flurona or something like that, because it's a variation of the flu. And it's like, of course, that's what this Omicron is too. It's a variation of the flu.
Well, yeah, I would. I'm hopeful that maybe the pace of variants, whether they continues to accelerate, but grow milder and milder to the point where this just becomes a way of life where flu strains and flu seasons are going to be longer and more extended. But we'll figure out how to keep restaurants open, go to live events, mask when necessary, and just be responsible.
What did we do in 2018 when it was flu season?
Yeah. I would say yes. I would think that I think we're going to have some short-term restrictions are going to come back, but I think they'll go away by summer.
I agree. So we'll wrap it up, Mr. Brown. What do you think? You think we'll be back to doing events? Okay.
Yes.
Thank you very much.
We should have oil and inflation. Those are the two other things that we should add on.
Yeah.
Oil in terms of price per barrel, or
At 75
all right.
right now, and I think it'll probably be a little lower than 75.
Hmm.
Yeah,
And
this
then
is
inflation, I
100.
think, will be close to about 9%. Of course,
Really?
it depends on
Wow.
which figures you look at. Okay, you guys ready for our second trivia question?
Yeah.
All right. Who was Kevin Arnold's sometime girlfriend on The Wonder Years? What was her name on the show? Do you remember the Wonder Years?
Yeah.
Yes.
Mhm.
Fred Savage, right? Okay.
Yep.
What was
And
Kevin
she was a
Arnold's?
cute little girl.
Yeah, the cute little girl. What was her name on the show? All right, call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Stay with us. You are listening to The Best of Investing. We come back. We've got a nice little email that we got from a listener. All right, don't touch that dial. Welcome back to The Best of Investing one more time. I'm Edward Brown, your host, along with our co-hosts, Mark Humph and Nam Phan of Pacific Private Money. The second trivia question. And the TV show The Wonder Years, who was Kevin Arnold's sometime girlfriend?
I keep thinking it started with an M, like Minnie or
Close. Close. It didn't start with an M, but it did, but it rhymes with that.
Minnie.
No.
Let me.
Think of
Penny?
what? No, Winnie Cooper.
Winnie. Oh,
Winnie.
that's
Yeah. All right.
All right.
Let's see here. Okay, an email comes in from a listener, and it says, "Why do you guys have 4 funds?" It
Why
doesn't
do
say
you
it with
have-
that tone of voice. I just sort of added
Why
that.
do you guys have 4 funds?
Why the heck would you guys have 4 different funds? So you guys have 4 different funds. You used to have just one fund. Why do you have 4 different funds?
Well, I'll start. So a mortgage pool fund for a loan originator, us, the sponsor, is a tool. And it's a tool to achieve a certain purpose for us. Now, the benefit of the fund for the investor is they get an above market interest rate, right?
Yep.
And so we have 4 funds because we have 4 strategies. And our first fund, the Pacific Private Money Fund, which we formed in 2013, that was just kind of a very generic, standard type of fund that we would raise capital to hold a portfolio of short-term mortgages and pay a above market return to our investors. And that's worked really, really well for us for going on, 8, almost 9 years. So we didn't start our second fund and our third and fourth fund until just the last couple of years, because we realized that there were ways that we could use the fund model to raise capital for conducting a certain type of business. So the market kind of shifted in the last couple of years, where a lot of companies, many of them based in New York, Wall Street companies, decided, we really like the kind of loans that companies like Pacific Private Money are originating, and we want to buy them. So now we're thinking, okay, well, how do we, but we have to close the loans first. That's the caveat. So our second fund, the Freedom Fund, was a fund to raise capital, to use that capital to close on loans, to originate and close loans that we would then sell to third parties. And that's worked fabulously. And we've raised, I think, over $50 million in the last 2 years in that fund. The third and fourth funds are specialty funds, also for a specific model. The North Star Fund, which we launched 2 years ago, is intended to fund construction projects, and it's co-managed by 2 experts, Matt Cordes and John Simonse, who have been whose careers have been focused on construction loan origination and underwriting. And with my capital raising skills and the power of Pacific Private Money behind that, we started that fund, and that's doing rather well. And then the fourth fund is a fund that purchases performing and non-performing notes. And it happens to be operating out of the state of Texas because the gentleman that we collaborated with, Mark Brown, has a company for the last 20 years that's been his business model. And so he was interested in raising a fund to help him grow that business. And he found us basically through Verivest. Our fund administrator referred him to us, and now we've collaborated on that fund. So, and each of those funds pay different returns to our investors based on the risk profile. So We start out at 6% with the Pacific Freedom Fund, and then the Pacific Private Money Fund is paying a little, is about in the mid 6% range. The Pacific Southwest Fund is paying 7.5% fixed, but we're limited as to the amount of capital we can take in because it's there to purchase notes. And then our North Star Fund, the construction fund, that's the one that pays the highest right now. For the last 8 quarters, it's been paying distributing at a 10% annualized rate, and that's because of the nature of the construction loans are more expensive loans for borrowers. So, long story short, is that we have 4 funds because we have 4 different business models, and the fund model, the Reg D fund, is a very popular format for real estate lenders, investors, and other real estate related companies to raise capital. It's a very efficient, effective tool that a lot of companies are using, and we're taking advantage of the ability to do that. So for more information about our 4 funds, we call them the Pacific Private Money family of funds. You can go to our website and click on Invest. That's pacificprivatemoney.com. pacificprivatemoney.com, or call us and we'll be happy to email you our family of funds brochure at and that's 415-883-2150, 415-883-2150. I guess, Nam, I sucked all the air out of the room. Anything to add to that?
I want to bring up my predictions piece again, and my prediction for you guys: will we actually do a live presentation in 2022?
Yes, we will.
I'm hoping we do. We need to get something on the calendar. I'm going to say summertime when it's nice out again. We get back out and shake hands, kiss babies. Well, not kiss babies, wear masks, but at least fist bump.
Yeah. Back to the funds. Yeah, the thing I like the most is the fact that there are no load funds. So people can get in and out without any fee, and you do have to be an accredited investor. And so sometimes we get people to call and they love to invest, but then they're not accredited. And the definition of being an accredited investor, you have to have at least $1 million net worth exclusive of your home, or income of $200,000 if you're single, $300,000 if you're married. So if you fit in any of those categories, call Pacific Private Money at 415-883-2150, or go to pacificprivatemoney.com. Also, all 4 funds qualify for QBID, which can potentially give a nice tax benefit. Check with your CPA on that. All right, let's see here. Our third trivia question is, what is the name of Woody's horse in the movie franchise Toy Story? You gotta remember that one. That's a little hard, huh? All right, call 888-912-1190. Quick, ask your 5-year-old. What is the name of Woody's horse in the movie franchise Toy Story, starring Woody? Right? All right, that's our trivia question. When we come back, we have some more economics to discuss. Maybe talk a little bit more about the funds. What the potential risks are, are there any defaulted loans, et cetera, et cetera. Those are the kind of questions that people like to know. Yep. And we'll see what else we got to talk about. All right, stay with us. Again, last time we're going to ask this question. What is the name of Woody's horse in the movie franchise Toy Story? 888-912-1190. First caller with the correct answer wins that tanning certificate. Stay with us. The Best of Investing. We'll be right back. Welcome back to The Best of Investing. Edward Brown, Mark Hanf, and Nam Phan here. Our third trivia question. What is the name of Woody's horse in the movie franchise Toy Story?
Is it Lightning?
No? You guys got it. Bullseye.
Oh, Bullseye.
Bullseye, remember? Right. Bullseye, yeah. All right. So were any other topics you guys wanted to cover before we get into more stuff about the fund?
You started out with how was 2021, and I mean, like Mark was saying, generally don't like to look back unless it's something where you want to kind of toot your own horn. But we had a blowout year, so I just want to say that we appreciate all of our investors. We're talking about the fund. we have so many investors who contribute and make up that $100 million in capital that we use to fund our loans. And that really helped us, really say no to any loan that was a good loan for us to fund. And we had a blowout year. It was by and large, consistent across the year, although it just accelerated even more in Q3 and Q4. And as we enter Q1 of this year, it hasn't slowed down. So, if what we see going on here at Pacific Private Money is any indicator of what's going on in the lending at large, whether it's California or some of the other states we lend in, I'm really bullish on 2022. I think the environment is this continuation of the same, which is, like Mark was saying, housing shortage, interest rates, even if they creep up above 3.5. I mean, that's relative to many other years. That's extremely low.
Yeah.
And weighted average interest rate over the last 30 years is still at 6%.
Yeah.
That we can't imagine 6% rates nowadays. And of course, home prices today do reflect lower rates in large part. It's hard to argue that home prices have risen to the level of people's ability to afford the monthly payment or stretch and even if they've had to stretch to afford it. The good news is that because of Dodd-Frank, you can't lie on your loan apps anymore, at least, and get a qualified loan. And a qualified loan is basically a prime mortgage through your bank or your mortgage broker. Now, they still have in the non-QM world, interestingly enough, they do have NINA loans, no income, no assets. And I don't know, one might think that, we're going back to 2005 all over again, but not really, because the law of the land still is you have to demonstrate the ability to afford the monthly payments. So we do have to prove the ability to repay before we can make a loan, even in the alternative world. So it's really, it's interesting how, how real estate and mortgages have morphed. But getting back to 2021 and looking forward, Nam, for what you're saying, it looks like home prices will probably continue to rise. Demand for homes will continue to be strong. The cost of money and mortgages it could very well go up. It looks like short-term rates, at least, are going to go up, according to the Fed, possibly as early as March. Now, those don't correlate directly with mortgages because the mortgages are based on the 10-year, but the 10-year is going to react to weaknesses in the economy that might be caused, or pressures on the economy that might be caused by higher short-term rates. So it's all interrelated. But that being said, I think the real estate industry is going to do really, really well this year, and the alternative mortgage industry is going to remain on fire as it has been the last couple of years. The conventional mortgage industry is going to see a lot of layoffs because refinance was 60% of their business the last several years. And that's going to go away unless something happens that would cause interest rates to go back down again. And we're not expecting that to happen this year. So Better.com already laid off a slew of people, and the writing seems to be on the wall that there's going to be a lot of layoffs in the conventional and bank lending divisions. But in the alternative world, which includes non-QM, jumbo prime, hard money, private money, fix and flip, construction, all of those are going to remain in high demand. And in fact, that business could grow as much as 50% this year. And they're all the companies are hiring like crazy, just like we are. We're out there beating the bushes for production specialists, underwriters, processors, doctorars, you name it. We're it's just about every phase. We've got a whole bunch of empty boxes in our organizational chart we're looking to fill, and we're not alone. You go on LinkedIn and you'll see a ton of companies in across the board that are looking for employees right now. I see ads when I scroll through my feed all the time. So I think it points to good news. Sorry, Edward.
I was going to say that with if interest rates don't go up too much, but yet the employees are getting, most of them are getting raises, or they're jumping to other companies to get higher paychecks because of the job market. They're going to be able to afford a bigger house, a more expensive house, and that I think is going to help drive prices up.
Yeah, unfortunately, I mean, I listened to a podcast the other day where Sean O'Toole was the guest, and Sean O'Toole owns Property Radar and is a very smart person in the California real estate market. And he lamented about how he is really upset, as many are, about how high home prices are. It's just, it's not healthy, it's not right. But it just goes to show you that, the age-old, law of supply and demand in capitalism, unfortunately, for better or worse, supply and demand, drives pricing in many, if not most markets. So it's,
well, a lot of it's the regulations. If various counties would ease up and let the developers build what they need to build, they'd see the profits. But
it'd be hard to roll back. It would take a government decree of unprecedented order to roll back decades of regulations that cities, counties, and states have put in place. It's easier said than done. Well, it's really hard to build a home, build houses in California.
Look at the costs. Forget the labor side of it, just the material costs had quadrupled in some areas like wood, lumber, and they came back down, but you got to think that they're still a lot higher than they were.
Yeah.
So you got to give it an incentive. So it's kind of interesting though how your North Star fund is still busy because there's ground. They do mostly ground up construction.
Mostly ground up construction in the North Star fund, and it's busy because we don't need, we're not trying to do 100 loans a month. We're trying to do a few loans a month in that fund. This fund is a size where it doesn't take that many loans per month for us to find, and we can go through quite a few. But they're just, banks have really not come back into the construction lending mode much this year. And when the COVID hit, they really pulled back.
Yeah. Everyone kind of got a little scared when COVID first happened. Everything sort of got put on hold.
Yeah.
Great. No trivia question, but we're going to cut to our last commercial break. When we come back, we're going to have some closing comments, so don't go anywhere. And then we'll also have our thoughts for the day. All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We'll be back with some closing comments. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf and Nam Phan of Pacific Private Money. No trivia question, but Nam, would you explain the bridge loan product? That's kind of your specialty.
Yeah, and every time I'm on the show with the deal of the week, it always seems like I'm a broken record, and I talk about, another bridge loan. But the good news is that that's one of our specializations, and so it's not a surprise that our deal of the week is oftentimes a bridge loan. And for our listeners, some of whom are our investors and some of them have borrowed from us, a bridge loan is a loan where we're helping somebody to be able to purchase their next home before they've sold their current home. And in the market that we've had over the last several years, and the market that we're continuing to be in, as of now and into 2022, is a seller's market. And essentially with a seller's market, it's what does that mean? It's, obviously it's beneficial to the sellers. They're getting the high, that's where price appreciation is. That's where there's a lot of activity on listings and competition for homes. And if you're a home buyer looking to purchase a home in this market, then not only are you dealing with higher prices, but you're also dealing with other buyers who can also afford that home. And so they're all competing for that property. And when everyone's making, let's say they're all making an offer for the same price, well, the seller is going to look at a few things to make their decision. But one of the biggest ones is, can this buyer for sure buy this house? Meaning, what could get in the way of them being able to purchase? And one of the biggest obstacles is if they have a home to sell, being able to sell it on time. So in this market, you have people who need an advantage if they have a home to sell and they're making an offer, and that's where the bridge loan comes in. And essentially what the bridge loan allows a home buyer to do is to make an offer that isn't dependent on their current home selling. And the bridge loan allows, we make a loan to them, they can complete the purchase on the home that they're buying, and then they pay us off once they sell their departing residence, the home that they're currently in. That puts them on, in many cases, an even level with cash buyers. So that continues to be our, one of our core products here at Pacific Private Money. And if you are in the market, whether you're a move up, millennial moving up from your first home to your second home, or you're a boomer who's moving out of the home you raised your children in and you're looking to downsize, that's where a bridge loan can really be a tool for you to take advantage of to get that next home before you sold your current home. So that's a large part of the population. A lot of millennials entering the real estate market or buying their second home at this point, moving up. And certainly a lot of boomers who are looking to downsize, whether a smaller house or going from two-story house to single story. Those are the types of clients that we're talking to. And so if you need a bridge loan, spring market's just around the corner. Give us a call at 415-883-2150. And
you guys are increasing your agent size all up and down California, aren't you?
Yeah, so that's the other thing too. If you're a loan agent, loan officer at a conventional bank or with another private lender, and you're looking to expand your, have more arrows in your quiver to be able to offer to your clients, give us a call, because we are expanding not only in California, Edward, but also nationwide. So same number, whether you're borrowing, investing, or looking for a job, 415-883-2150.
All right, guys, you ready for our thoughts for the day?
Yes.
Yes, sir.
The mechanic asked me if I've ever rotated my tires. And I thought, how does he think I got here?
That's good.
There you go. Okay,
Wow, all right.
laugh on that one. And what's a lawyer's favorite drink? A subpoena colada.
Oh, of course.
All right. Tune
Good
in
joke,
next
Edward.
week to the best of investing. We're going to have more dad jokes. We'll be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.